Hey, friend, welcome back. As always, I'm your host, Brian Davis, co founder of Spark Rental, and I am on a journey to reach financial independence with a group of other investors in our co investing club. I invest my personal money every month in each one of these group real estate investments in the club that we make. This is my personal strategy for reaching financial freedom, and I have a lot of fun sharing it with our members. And we bring in every week, several times a week, we bring in guest real estate experts and guest financial experts to help answer some of these nagging questions that we all have as investors and show us just some opportunities and options that maybe you didn't know were available to you. So on that note, today we are breaking down how to get an investment property loan when you're self-employed, which is a big struggle for a lot of real estate investors, especially novice real estate investors. And to help us with that, we have brought in Joe Massey of Castle Cook Mortgage. Joe, glad to have you on the show. Tell us, how do you get an investment property loan when you're self-employed?
Oh, Brian, thanks so much for having me, man. Really grateful to be able to speak to you and your community. And the challenge that you asked there is how to get an investment property loan when you're self-employed. I hear about this a lot. And interestingly, we don't struggle with this too much. Greater than 35% of our clients here at my team are self-employed. Now, if you were to call a local bank or maybe a big box bank, you might say, hey, I'm self-employed, I want to buy an investment property. And then all of a sudden they just hang up the phone, right?
Right.
It's not that bad, but they oftentimes can't help. And this is something that we're really good at. And what it requires is a little bit of paperwork, right? We're going to ask for your tax returns, your business tax returns. If you pay yourself from your business, if you give yourself a paycheck stub, a W-2, we're going to need bank statements, and then information or that same information for your spouse. And we go through and we review those tax returns in depth, and we understand write-offs, we understand depreciation, we understand certain money comes in, certain money goes out, but we do an entire cash flow analysis on that business, whether it's a manufacturing business or a trucking business or rental real estate or whatever type of business it is. We do an entire cash flow analysis on that business. And then from there, we can determine what is the income coming into that business? Does it support your lifestyle and the debts that you currently have? And can you afford the debt on the new investment property? And one thing that a lot of people forget about, we're going to give you credit for the income on that new investment property. So even though you don't own it right now, you're buying it, we're still going to give you credit for that income. So that's the number one way, is we treat it just like every other type of conventional loan. And we're going to go all the way through the tax returns and look at everything you've got out there and make sure you've got sufficient income. Now, the second
Now,
way we can do it.
oh, go ahead.
Go ahead.
Yeah, go ahead.
I was going to say I have three, but you can
No,
stop
no,
me with any
please,
questions.
please.
The second way is we can actually look at bank statements. So we can look at 12 months or 24 months of personal or business bank statements. This is a program that a lot of people talk about, but it's actually a little more difficult than people realize, because we do go through the bank statements, how much is coming in, how much is going out, and we do still have to see that sufficient income. And oftentimes, if the tax returns maybe don't show enough income, the bank statements may also not show enough income because they should be pretty similar, right?
Right.
And then the third one, we can look solely at the cash flow of the property. So if you've got a property that you're going to buy and it's going to rent out for, let's make up a number, $3,000 a month, you just have to put enough money down so the new payment for principal, interest, homeowners insurance, taxes, and any HOA is less than $3,000 a month. So as long as your payment for all of those is $29.99 and your rental income is $3,000, we will give you a new loan on that property, and we're not going to ask for tax returns, paycheck stubs, anything like that. So those are three
Wow.
different ways that we use pretty frequently.
That's quite generous. Let me ask you this. So for self-employed borrowers, do
Mhm.
they typically pay higher interest rates than W-2 borrowers? Do they end up with lower LTV loans than W-2 borrowers? Like, break us down what that looks like.
Yeah, the answer to that is no. There's no difference in interest rate or fees if you're self-employed versus if you are W-2. You do not have to put any more money down. Actually, I have a client that is closing next week. He's self-employed. He's been self-employed for 16 months, and he's putting 3% down on a regular first-time homebuyer loan. So we know exactly how to do that. Now, he's not an investor, but same concept works for investors. The only time you might pay a higher interest rate is if we're doing alternative income verification. For example, bank statement loans would have a slightly higher interest rate, or that third option, that investor cash flow loan, because we're not looking at any of your income at all. We're solely counting on the property. That's going to have a slightly higher interest rate as well. But it's not dependent on whether or not you're self-employed. It's really dependent on property type and how we're able to verify that income.
Okay, great. And one last question for you. Do you guys also work with portfolio lenders, or do you strictly work with conventional financing? How does that work?
Yeah, good question. We actually are a portfolio lender. We keep about 92% of our loans that we keep in our own portfolio. About 8% of our loans are sold off to various other entities. So we have a lot of creative things that we can do. You know, it has to make sense, right? A lot of folks think, oh, you're a portfolio lender. That just means you'll make terrible loans. No. We make really good loans, and we decide to keep a certain percentage of them. So it's something that we've done for a really long time, and love working with investors, and so grateful to be here and get a chance to speak to your community.
Joe, in 30 seconds or less, how do you help people beyond what we've talked about already? And how can listeners connect with you?
Yeah, absolutely. You guys can reach out to me anytime. My website is really easy. It is just loansbyjoemassey.com. You can call me on my cell phone, 303-809-7769. Or, of course, you can email me, jmassey@castlecookmortgage.com. And, Brian, I'm sure you'll put notes of all my contact information on the show. But please feel free to reach out to me anytime. And what I can do to help is give you the expertise of somebody that has closed more than 3,000 transactions and greater than 1,000 investment property transactions. So whatever type of transaction you're looking at, you might be a little nervous. It might feel unique. You say, I'm not really sure. I've never done this before. I've seen that exact same scenario multiple times in my career, and I'm happy to help you with it.
Awesome. Well, Joe, thank you so much. And guys, if you enjoy these quick hit conversations that we have, please rate, review the show. It makes a world of difference to us, and we will catch you on the flip side. Wondering how private equity real estate investing works? We get it. A lot of investors are put off by phrases like private equity or real estate syndication, but these completely passive investments are actually a lot easier than buying properties directly, buying properties yourself in your own name. So we offer a free 40-minute class called Hack the Rich, 7 Secrets We've Learned from Private Equity Real Estate. There's not even a sales pitch at the end. We'll show you how to invest in these on your own without any help from us. So go to sparkrental.com/hack to take the free class. And we can't wait to chat about your questions.